Hey traders, what's up? Jamie Saettele here. It is 24th of November, 2021, Thanksgiving Eve. So happy Thanksgiving to those of you in the US. And if you're not and you celebrate it, happy Thanksgiving to you as well. So yeah, we have got volatility picking up here in FX. It really has been gradually over the last couple of weeks. I wrote last night in my piece that this little break, because I wrote yesterday and I'm not going to write until next week. I'm going to take a couple days off here and cook and stuff my face and all that good stuff and watch football and hang out with my son and just enjoy Thanksgiving. But I said it can't come soon enough. It is kind of the perfect time for it for me because frankly, I've been so out of tune with the market here lately. Just let's take a look at DXY here. I'll scroll in here a little bit. So if you remember, okay, let's just kind of backtrack, right? All right, so we had held a bullish view on the dollar for really the entire year, and that proved to be the correct move, right? We got up into resistance back here in October. I thought we were going to push a little bit higher. We didn't. We failed. And then, of course, after that, I actually ended up going kind of turning a bit bearish on the dollar. And then we had NFP here, right? Thought maybe we're putting a top there. And then we got this entire move. So it's been, kind of a fight for a lot of October and November here, and that's all right. You got to learn from it. But let's think about where we are now. So this is DXY. Okay, this is the 2011 and 2014 line, if you will, and I've got a parallel here extended from the 2018 low. So we are just tagging that level right now, the underside of this. And from here up to that next line, which is actually the 618 retrace of this entire move down. Oh, hold on. So yeah, we are looking at, we are looking at this level here. Getting some messages coming through, so I'm a little distracted. Sorry about that. But yeah, bottom line is we are starting to hit, or we are hitting a really big level here on DXY as I sit here and speak with you. And not only that, but we are starting to see, as you know, I look a lot at sentiment, of course, right? As a technician, sentiment is key. And, the combination of a huge level along with sentiment getting a little extreme often can mark a good turning point. So we are starting to see, if you go to Google News, just type in US dollar, we are starting to see language like dollar soars, dollar jumps, stuff like that. And that kind of strong, active language tends to be indicative of a sentiment extreme and therefore a price top or risk of a price top, I should add. So that is a bit of, kind of what we're looking at here in terms of the current landscape. All right. Okay. So we've laid out here that DXY is into a big level. We've laid out here so far sentiment is getting a big extreme. Now, again, these big moves, and look, for much of the year, we've had this kind of consolidation. Dollar broke out, had a big move off the lows. A lot of the move has come just in the last couple of weeks, right? So just because we're getting into a big level doesn't mean we can't try to overshoot it and get to that 618 at 97.70. So be careful in terms of, trying to fade this like immediately. Again, like I said, taking off the next couple of days, I think is a smart move. And we will, see where we end up here at the end of the week. But like, frankly, I'd like to see kind of a strong reaction before attempting to do anything like, nice key reversal, something like this, right? Something like this right here, okay? Like that candle. Now, again, that didn't really lead to anything. That was actually last Thursday, but yeah, something like that, right? That's what we want to see. Okay, moving on. Spent enough time there. Let's take a look at Euro. And I'm going to, where do I have the right chart up here? I don't know. Here's what we're going to do. I'm going to show you. This is actually a key little teaching moment here, right? All right, so we've got a couple levels to pay attention to. At this point, you just want to go levels, levels, levels. So we're looking at the low here from June. That's going to be 1168. We almost hit that today. And the other level, really big level that we want to pay attention to is, all right, so you see this big reversal bar right here? That was back in March. That was the COVID low, if you want to call it that. So notice how we made a low. That was a reversal bar, right? So that's what we call weekly reversal resistance, or sorry, support in this case. And an example of weekly reversal resistance is actually the high bar up here, and then you put a line right there, right? Do you see how that's resistance? So we kind of call that hidden resistance, if you will, and hidden support. So that level right there is 1132. So that's a level you really want to be aware of and pay attention to in Euro, and I'll leave it at that. DXY has that clean spot on it, right? That clean trend line in that 618. As far as Euro is concerned, we don't have that, but we do have that weekly reversal closing level at, again, 1132. All right, so pay attention there. Cable, hell if I know. I don't know. Cable, about the only thing I can tell you here is that I would pay attention to this little parallel here, which is like 133, and that's in like 30 pips. For all I know, we hit that by the end of this webinar. If I go 2 legs down, oh, that's 133.05. That's cool. So this is a possible, we actually talked about this last week, a possible wave count, having A down, B up, and then a 1, 2, 3, 4, 5 as an ending diagonal. I'm not sure, how viable that count is, if you will, but like 133 is the level to pay attention to for British pound. If that doesn't hold, then frankly, I'm kind of out of options until like 130, 165. But that's where my head is at right now. We're looking at 133.05 for British pounds. All right, let's go to dollar yen. This is a big one. Okay, so dollar yen. Here's a weekly chart. Big level, okay? 115.60 to call it like 116.20 or so. We're currently trading 115.40, so we're basically there. And 115.60, excuse me, is the 618 retrace of the decline from 2015 to 2016. So big level there. Also, you see this high right here. That's the March 2017 high. And if you look to the left of the chart, you've got all kinds of interesting pivots back in 2016, 2015, 2014. That right there, August 2015, that I believe is the China reval. You remember that? That was a spike low right there. So all that being said, 115.50 to 116.20 is a big spot. Moving on a little bit to the other chart we've got going on here. If we slice through that, then maybe we actually make it all the way up towards the 118 figure. You see this magenta line here? That is actually a trend line that like crosses stuff all the way back to 1978. That's kind of nuts, right? And you can see right here that that would really be the key level to pay attention to. But as far as near-term stuff, I'm going to be watching for, again, 115.50 116.20, which is pretty much right now, right? Aussie, my goodness. Talk about a textbook setup. This is a weekly chart back here when we hit that resistance and then rolled over and fast forward, and the dollar is just soaring against these commodity currencies. At this point, it does not look like there's going to be much stopping this until I would say probably the 69.90 to 70.50 area. Again, 69.90 is the low here from November of, it's actually November 2020. It's the election, presidential election. And then you've got the high here from December 2019. And the 38.2 retrace is 70.50 from the COVID low. So that looks like a pretty, call it a magnet, if you will, right, for the market. And, you know, I get it. Probably not. If you're not already involved here, you're probably not going to get involved right now, considering that we are testing kind of the bottom of the range. But I will say I'll throw out kind of some levels to look at if we do bounce in the coming days. And it's going to be like 72.90 to 73.15. That would be a level to pay attention to. Okay, or a zone. And also, by the way, like you don't have to, you know, look, we've got Aussie, or sorry, you got Euro coming into this potentially big support, right? DXY, big resistance, which is reflected in Euro. And maybe dollar yen into big resistance, although Euro seems to be a little cleaner to me. But with Aussie and Kiwi, especially not so much CAD, but especially Aussie and Kiwi potentially having a little more downside. Look at like Euro Aussie and Euro Kiwi, right? Those are interesting pairs to look at, maybe if you don't want to mess with dollar at these levels. All right. Kiwi. So we are coming into a big spot for Kiwi. This is the neckline, so to speak, that we bounced off of back here in August and then again in September. And we're coming in on it now. Let's see here. All right, this is a really long-term chart. I want to see where we get two equal legs. Two equal legs gets you here 65.60, okay? And that's going to be down in this area of former congestion, which is from October and November, actually, election. So same as that Aussie level. Makes a lot of sense, actually. It's the exact same as that Aussie level from the election of 2020. So that, again, looks like a magnet to me. So yeah, it does look like we have big potential downside in Kiwi. And here, if we throw up a fork, you can see we're trading right at the center line right now. All right. Again, gives us a good point of reference. So if we do get a bounce of some sort over the coming days, I would be looking at resistance up in this 69 set. Let's call it 70-ish type of zone, right? And then your downside is going to be down here towards, again, 65.50. Okay, so you do have, you know, pretty good, you know, setup here, construction for a short position. Again, you probably want to see it bounce. The other option, of course, if we don't bounce from here, and this is the great thing about trading with median lines, is the various options to leg into or get into a trade. All right, come back down and then that old median line becomes resistance, right? And something like that. So that's how I would look to trade, or not how I would, how I am looking to trade Kiwi dollar. And again, you can take a look at crosses like Euro Kiwi or even Kiwi yen for that matter. Okay, let's take a look at dollar CAD. Dollar CAD came into yesterday thinking that we were going to go for that 27.70, right? You see that high right there? See 929, September 29th high in the little trend line. And we still could go for it very well. And 125 is probably going to be your support level here as well. However, we hit the median line yesterday. Again, draw a channel, extend it from the top, and center line right here. That suggests we could have already put in some sort of a peak and that we may be pulling back some. And if we do, again, that 125 area is probably going to be support. So either way, don't really have much to do here. 127.75, like I said, if we get there, great. I'd be looking for us to pull off and maybe get down towards 125. If we don't, right, and we don't get to 127.75, I'd still be looking for 125. So either way, I'm thinking we pull back to 125. We're into kind of a sticky area up here. Let's take a look at some currency crosses that aren't often looked at, or not as popular, I should say. So dollar SEK actually just hit my target, okay, with the breakout that we had here. Again, dollar SEK was a big tell. I didn't pay enough attention to it. Such is life. Actually wrote about it saying dollar SEK says that the dollar could absolutely soar, and then I didn't do anything about it. But that's life sometimes. Okay, dollar NOK. A lot like dollar CAD, and not that surprising given that, they're both petro currencies. So we are looking here for probably the center line, which is going to be about 903. Okay. And then I'd be looking for a slight pullback there. Dollar peso. Ripping into levels, just took out that March, or tagged that March high, just traded the highest level since the election day of 2020. And again, into a sticky area. So I'd be a little careful here, take some off. 38.2 is in line with that spike high from the election of 2020, and that's going to be 21.93. Big level up there. So as you can see, looking at these other dollar crosses, we are getting into levels as well that are, not necessarily repellent to the dollar strength story, but could be. At least, they haven't necessarily done it yet, but they could be. So it's like, paying attention. Also, by the way, something I forgot to bring up here. I meant to bring this up earlier. Let's see. Dollar, this is seasonality. We actually, historically, the dollar tends to peak out, right, or top during this week. So the week of Thanksgiving, from a historical perspective, which is what seasonality is, right, the dollar tends to put in some sort of a top. So combination of the seasonals with the sentiment, which we talked about earlier, with the huge level in DXY, which we're at, really a zone. We're at the bottom of that zone. Yeah, man. So we are, put all those things together, mix them up in a petri dish, and you got the makings of maybe some sort of a exhaustion rally here in the dollar, right? Again, price is king, price pays. We all know that. But if we, it's nice to be kind of on guard, right, for something different, a change in behavior. And if we do if we get a reversal candle or something like that, preferably a day, right? I'm not talking about an hour, right? Something legit, then I'd be willing to go the other way. Okay. All right, let's go to some other things here like gold. I forgot to look at crypto. We looked at crypto last week, so might as well look at crypto. Okay, so nothing's changed actually. We the same stuff we looked at last week. What was last week? Last week was here, right? We looked at like last week right here, either here or here. I'm not sure if we did it last Thursday or last Wednesday, but either way, same levels are in play here. Resistance for Ethereum probably up here, 40.46, 44.60, which actually we did hit this week pretty close. And the big level is still this trend line / I would, make it this big blue neckline, 3,800. That's still your big level for Ethereum, okay? This is Bitcoin, and the Bitcoin levels, again, resistance. We're still kind of trading back and forth through this median line. If you do get a spike rally, and again, you can be on guard for a spike in this thing at any time, call it 62.9 or 63,000, give or take, is going to be the level for resistance. And we are, this blue line here, trend line, which is now a little bit above that high. That's going to be like 53,900. Let's call it 53.9. That is going to be your big behavior change level for Bitcoin. So if we start to crack that, look out below. Okay. So yeah, again, not a whole lot to add to last week's commentary on the cryptocurrencies, at least the big popular ones, the two biggest ones, but wanted to highlight that real quick. All right, let's go to commodities. All right, so we'll go to gold. All right, so gold. Remember the big breakout at 1834? Whoops. Yeah, the breakout didn't last very long. Gold's gotten absolutely destroyed here this week as the dollar rally has gained steam and become broad-based. However, I would pay attention to a wee bit lower. Let's call it 1770 or so. All right. You see here, that's the channel line or the lower channel line, line off of this August low and this September low. Okay. Pay attention to that. It's interesting to note in light of course, Japanese yen, right? Yen trading 1550 and all that good stuff, and into that zone that we mentioned. It's interesting to see dollar or gold coming into a level where we could find ourselves a bid as well. So again, gold and yen, often good kind of intermarket analysis. If you're going to be studying trading yen, I like to know where gold is, when it comes to that. So gold coming into support, if we show support there, kind of gives me a little extra oomph, confidence in maybe trading a yen reversal. But again, you got to see it in the underlying of what you're trading, right? Don't backdoor it. So just another piece of the puzzle. Okay, silver, similar. Basically, I'll just go 4-hour chart here. So that little low there from the, the early November low actually, and then 618 of this rally. So it's going to be 22.94 to 23 bucks. So we're fast approaching that level. Pay attention there for support and a bounce. Copper is acting a little weird in light of what's happened with like commodity currencies in general. I mean, Aussie and Kiwi have gotten absolutely just smoked. And here we are. Copper is actually holding up really well. So, 200-day average, top side of former resistance line, providing support. I don't know, no man's land for copper for me, but if we do bounce, watch for 463-ish for resistance. Until then, don't really have much to add on copper. Crude oil is a very interesting one. All right, you see this thick blue line here? It's like mid 72s, right? That's where you want to watch for support. I'm going to go to a weekly chart. That is, again, trend line all the way back to 2008, okay? And that's right there. So a 72 handle is where that line comes in. And that's the level you really want to be paying attention to for crude oil, okay? Especially as we come into the end of the year, because crude seasonality, actually crude tends to rally in the first 6 months of the year. So if we can, come off into that 72 level, then, you set yourself up for maybe a nice little play into the new year. All right, let's look at quickly some equities indices. We didn't look at them last week, so there was really nothing to look at. But now they're starting to move. As I said last week too, that remember the volatility in FX and rates and stuff will precede the volatility in equities, because equities are always the last to know for whatever. It's the dumbest market. But yeah. All right, so here's Nasdaq Futures. Just absolutely perfect off that top, okay? So certainly could be something bigger to write home about. I would be watching for, first of all, a couple things here. You've got a nice dividing line here at the center line from the channel from March. Pay attention to that. It's like just below the market, call it 16,000. So you see how it was support before, gap here, breakout. You can use this as a point of reference to trade from. So like, you can trade off of this for support. If you break it, watch for the underside for resistance and all that good stuff. And then of course the bottom of this line is going to be key for support if we get down there, and that's going to be probably around 15,400 or so, depending on when and if we get there, of course, right? So those are your big levels to pay attention to for Nasdaq Futures, and that's really the one that I'm paying most attention to in equity land. Okay. All right. So that is everything. Excuse me. That's everything for me. I'm finished. So again, the biggest thing to come away from with this webinar today here before Thanksgiving, on Thanksgiving Eve, is of course this DXY chart and the huge trend line that we're coming into, underside of that trend line, I should say, that we've reached. And yeah, 97.70 is the 618. We've got, just potential or a zone here that could be significant in terms of resistance for the dollar. All right. Okay, so that's it. Again, Jamie Saettele here of sbtradedesk.com and Scandinavian Capital Markets, ScandinavianMarkets.com. Wishing you and yours a very happy Thanksgiving and a wonderful weekend. All right, take care. Bye.